when you see what the euro dollar is doing, we've still got the euro on the front foot, a possible bailout package for Greece, and this perhaps creating a slightly softer scenario for gold at this point.
Yes, I think there's a lot of risk premium in all commodities. I think gold is more of a safe haven than an industrial commodity, or the way I would view its valuation. And we're treading water. I think it's undecided as to which way it really wants to go. But I think that there's going to be risk in the globe for a long time. Despite QE2 coming to an end, despite the bailout package potentially being on the table, you know, the world is focusing on a solvency issue, not so much a liquidity issue. And I think the risk premium in commodities is going to persist for a while. So I think it's easy to believe that gold could move $50 to $100 either way.
To what extent have you been watching the euro gold price? Because we know that it hit a record of 1,088 euros. That was last week, falling down slightly and usually used as a gauge to see what investors think of the debt scenarios playing out there.
To be honest, I think that the whole developed world is quite tricky to value against each other. I think they've all got their peculiar problems. I think the US dollar is going to continue to weaken. But I think that there's arguments, if you had to strip Germany out, which is the majority of the value of Europe, the euro needs to weaken. So I think we're going to continue to see volatility amongst the crosses. And depending on which package or which headline receives attention, you're going to see value drifting between sterling, euro, even Canadian dollar and the Australian dollar, and causing quite a bit of volatility. But generally, I think the majors are going to weaken.
Yeah. With regards to the oil market, also fascinating moves there, and we've seen the oil market quite strong over the past while. OPEC meeting in Vienna in June, that being in focus, and then you've got Germany saying that they're going to cease producing electricity from nuclear energy, and apparently that is also quite a nice cushion and a booster for the oil markets. And then you've got the Libya overhang. Yeah.
So if you're not totally depressed about world growth and you think that we can limp along and potentially have relatively decent real growth, which will boost emerging markets, which are still dependent on fossil fuels and oil being that primary fuel, I think you have to be bullish on the oil market going forward, given supply and demand dynamics. So I think that although oil has topped out from its highs, I don't think it can really come off fast. And if anything, I think that we continue to drift higher.
Okay, when we say high, we're talking about a bullish oil market. What levels are we looking at? Are we looking at 125? Are we looking at 130? Or are we looking at an average of 120?
Well, I think you have to bring time into perspective here. I think that if we were to shoot up to 140, it's growth destructive. And as a result, I think the support for higher oil fades. But I think over a next 2 to 3 year period, I think we could sustainably achieve 150 and trade at those levels.
With regards to platinum as well, also much stronger today, up almost 2%. What is prompting quite a bit of buying in the platinum space?
Well, the demand factors have been brought into question around the Japan demand and the automotive industry in that area. The latest reports I looked at suggested that the demand for platinum was going to be on the uptake again and that the price got hit too severely. So I'm still fairly optimistic that platinum can move higher by another $40, $50.